Robinhood reported earnings last week, and the market's reaction was a little bit strange. Shares were up right after earnings came out, but actually dropped to end the week. So a little bit of a confused reaction from the market, but I think it's worth taking a step back and looking at where the company is going, what the strategy is, and how they're performing financially, because I think this is one of the most disruptive companies in fintech right now, and one that I've added recently, one that I'm looking to add more to after these results. So let's dig into exactly what I liked and what I didn't about the quarter. My name is Travis Hoyam. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content, and thanks to this video sponsor, The Motley Fool. If you go to fool.com/ASYM, they'll give you their top 10 stocks to buy right now. Let's get right to the report. This is a look at what they call the business highlights, and this really gives an idea of the trajectory of the business. So on the top left here, funded customers, the number of customers that actually have a funded account, that is growing steadily over time. Assets under custody, that is actually growing really nicely. I'll get to one of the drivers of this, and that is cryptocurrency, but you want this to be moving in this direction. So solid numbers there. On the bottom right, you have net deposits. That's basically the additions that they're having into the ecosystem. So you can see that really picked up. And that, I think, was after a lot of the announcements that they made related to the gold card and all of the benefits that you have with gold memberships. And that's the other piece right here, is the gold subscriptions up to 1.68 million, adoption rate up to 7%. The way that I think about Robinhood at this point is that they're going to run a lot of the business at break even. They're going to be giving benefits. They're going to be losing money over here. That 3% cash back with the gold card, there's no way that they're going to make money on that. So they're going to be losing money on that. But if they're going to lose money there, they need to make money somewhere else. So they're making money on the brokerage side. They're making money on the spread between what they're paying out in interest and what they're generating in revenue from interest from things like margin loans. So when you add all those pieces together, a cohort of customers is going to be break even, at least maybe a little bit profitable. Where they're going to make their money is on these subscriptions. This is just a $7 monthly fee that they're going to make, and I think that is ultimately going to be the profit, and that's going to be your differentiation. That's something that a big bank just can't compete with, because they're going to be able to give out better benefits for a lot of different products, like the gold credit card that I talked about, when they know they can fall back on these gold subscription revenue numbers. So that's why I think this is really positive. It's really the Costco model. I've covered that a bit on this channel. But that's the way that I think about it, is that this is where the profits are going to come from, and then the rest of the business can basically be break even, and that would ultimately be a differentiator in the market. Total revenue is up sharply, operating expenses being held really steadily. This is what I think is really impressive is a lot of these companies are now finally getting to the point where they're having cost control, and that's how you get to the point where $157 million in net income in the quarter. Here's a look at where those assets under custody are actually sitting. A lot of the biggest part of the increase was actually equities, $82 billion from $69 billion. But look at the percentage increase in cryptocurrencies. That went from 15 billion to 26 billion. So that's really where you're seeing the growth on a percentage basis, is in the cryptocurrency side of the business. And I think this is where Robinhood is really starting to grow up as a company. You see the retirement account growth. This is quarterly. This is on a quarterly basis. So this goes back to Q1 2023. Nearly tripled the number of customers with retirement accounts, and the retirement assets under custody, now $4.2 billion. Now, there were some major benefits that they gave to customers related to putting their assets on Robinhood. But again, the goal is to get those assets on Robinhood, and then you can generate revenue in all kinds of different ways as a brokerage after the assets are on your platform. So that's really what they have looked to do over the past few months, and it looks like it is going extremely well. They're also reaching much higher value customers as well, $6,500 in retirement assets under management per account. And again, to go back to the gold subscription, this is really what they're driving. This is the value that they're giving to gold subscribers, 3% IRA match, 3% cash back on the gold card, 1% match on deposits. So you're losing money on each of those things. But like I said, you're able to make money elsewhere in the brokerage system through all of the other things that brokers do, whether it's their payment for order flow, whether it's margin loans, whether it's borrowing shares for short sales, all kinds of ways you can make money on the back end. And as long as the number of subscribers is growing and those subscribers are valuable with 8x the custody of an average customer, 2 times the deposit rate, 5 times the retirement adoption rate, these are all trends in the right direction. And it's not this YOLO trading that Robinhood was really known for during the pandemic. This is a much more sophisticated audience focusing on retirement, funding their accounts themselves, so it's not something through a business. So I think this is all Robinhood moving in the right direction strategically, and the financials are following as well. And that's the last thing I want to highlight here is just their trajectory of the revenue, and they break it down here, transaction-based revenue in this kind of yellow color. Green is the net interest revenue, so that's interest on things like margin loans minus the cost that you're actually giving to customers, and then $35 million in other revenue as well. Average revenue per user also on the increase to $104. Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. So I think the business is definitely moving in the right direction. All of the things that you want to see from a brokerage account and a fintech company, they're getting more operating leverage on their business. They're growing the deposits that they have. They have a unique business model where they can lean on that subscription and actually give benefits that other companies can't. So I think all of this is good news for Robinhood strategically. Now the question is, what should the company be worth? $157 million worth of net income. You annualize that, get to around $600 million. The current market cap of over $14 billion, that's pretty expensive for a financial firm. And I think that's really the balance that the investors are thinking about right now is what do you pay for this company? How sustainable is the profitability? Especially when a lot of that revenue was coming from cryptocurrencies, or a lot of the growth anyways was coming from cryptocurrencies. That may not be something that's all that sustainable long term. But overall, I think Robinhood is definitely moving in the right direction. I think especially with Robinhood Gold, they have a much stickier business than a lot of other brokerages, and they keep pulling customers away from other brokerages. And I just can't get past the fact that a lot of brokerages are leaning into their physical infrastructure, building out more branches. Robinhood is going in the other direction. This is a digital company that's leaning into being an app-first company. And that's just something that the Charles Schwabs of the world, the Goldman Sachs of the world, they're just not going to be able to compete with that because that's not what they do. So long term, I think Robinhood is definitely headed in the right direction. Interesting to see the stock pull back a little bit, but as that happens, I think this is more of a buying opportunity than it is a warning sign for investors. If you're thinking about this company long term and where is Robinhood going to be 5 to 10 years from now, I really like where the company is going, and it looks like they can continue to add customers at an extremely rapid rate given those benefits that they're giving out. Remember that the Gold card is still on waitlist. So we still have not seen the full impact of potential additions from Gold members. So I think we'll see a lot of momentum on the platform in 2024. But what do you think of the results? Leave your comments in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.